Hi, in this video, we're going to continue walking through the 10K. In the previous video of the 10K, we went through the business overview of Chipotle. In this video, we're going to start walking through the risk factors. Now, one thing you're going to notice as you go through 10Ks is they're all going to have quite a few risk factors. One of the things that I think is interesting as you do this is you're probably going to start to see the business a little bit differently than just as a consumer. And as you go through more and more 10Ks, you'll get more comfortable with the language and some of the issues that come up. But one of the things that I find interesting is just some of the different things that these companies are thinking about as they think about where risk comes from. So we're going to start walking through Chipotle. Here we have risk factors. And there's going to be quite a few of these. And what they do is they give the risk factor and then they tie it specifically into Chipotle. Now, they're not necessarily in order of priority. So it's not saying this first risk is the biggest one. And by the time we're on the 10th risk, we're down to things that aren't very important. Instead, they're just different risk factors. So risks related to our business and industry. Food safety and foodborne illness concerns may have an adverse effect on our business by decreasing sales and increasing costs. I think I've mentioned this before, but for Chipotle, this is one of those issues that probably hits home a little bit more than for a lot of other companies. Here you can see I've highlighted a section from 2015 to 2017. Illnesses caused by E. coli bacteria and norovirus were connected to a number of our restaurants. And in 2018, illnesses believed to be caused by some bacteria I'm not going to try to pronounce were connected to the food in one of our restaurants. As a result of these incidents and the related negative publicity, our sales and profitability were severely impacted through 2016 and from time to time through 2018. This was a big deal for Chipotle. Now, you may or may not remember these stories, but it definitely had an impact on Chipotle's stock price, on their sales, on their profits, all those things that investors care about. So for Chipotle, one of the things that's very important for them is to instill consumer confidence that you're going to be safe eating at Chipotle. Now, my feeling is that you are always pretty safe eating at Chipotle, but the way things work is once it gets media attention, it starts to cause people to think twice about what they're doing and be a little more sensitive to risks. So since Chipotle has already had some negative publicity, any secondary outbreaks or secondary concerns are probably going to be a bigger impact for Chipotle than some other companies that haven't had the first pass through with those situations. Another thing that you see, information technology failures or interruptions could harm our ability to effectively operate our business and or result in the loss of guests or employees. Now, this is one where I said, sometimes you don't think of these businesses being exposed to some of the risks that they're going to show up. If you just think of Chipotle, yeah, I go there for burritos or I go there for tacos. You don't think, well, this is a company that's very sensitive to technology, but they do have quite a bit of technology, point of sale services, digital order apps, all kinds of things like that are a huge part of their business. So their technology in running the business, as well as taking orders, all those things are a risk factor for Chipotle that they're going to have to focus on. Cybersecurity breaches are other privacy or data security incidents that expose confidential guest, personal employee, or other material confidential information may adversely affect our business. So any type of cyber attack, and you might think, well, why is anybody going to cyber attack Chipotle? Answer, they do a lot of credit card business. They have a lot of data. Almost any large company is going to have to focus on information security and technology security. That's a huge important factor for any large corporation. As a matter of fact, if you see from time to time, we have been and likely will continue to be the target of cyber and other security threats. In April 2017, Malware was detected in our payment processing network that was designed to access payment card data from cards used at point of sale devices at most of our restaurants. We removed the malware from our system and enhanced our security measures. However, we incurred significant costs and legal liabilities in connection with this incident. So again, a lot of people think of Chipotle and they think, what's happening to food prices? What's happening to labor costs? But technology security is another factor that does affect their bottom line. They've got to spend money on cybersecurity. Another specific item, the European Union adopted a regulation that became effective on May 2018 called the General Data Protection Regulation, which requires companies to meet new requirements regarding the handling of personal data, including its use, protection, and transfer, and the ability of persons whose data is stored to correct or delete such data about themselves. Failure to meet the GDPR requirements could result in penalties of up to 4% of annual worldwide revenue. That would be a huge hit for Chipotle if they had to pay fines of 4% of their total revenue. So this is a big factor. They also mentioned that California has some issues. Compliance with the GDR, the CCPA, and other current and future applicable international and U.S. privacy, cybersecurity, and related laws can be costly and time-consuming. This is one of the things that I've encountered in higher education. The cost of compliance with regulation is something that everybody has to deal with. One of the factors that affects higher education costs is oversight and regulation, which serves a good purpose, but does raise costs as universities now have to comply with that. Corporations are the same way. The more regulations are out there, the higher the compliance costs to deal with these. So while the regulations may be serving a good purpose, we have to remember there are costs to the corporations in not just fulfilling the requirements, but in verifying that they're fulfilling those requirements. The retail food industry in which we operate is highly competitive. If we're not able to compete successfully, our business, financial condition, and results of operations would be adversely affected. Quickly think of how many competitors there are to Chipotle. You could go to McDonald's, you could go for a pizza, you could go to Taco Bell, you could buy stuff at the grocery store and make it at home. You could go to a more upscale restaurant. All kinds of different competitors out there. You can have people over, and instead of all going to one restaurant, you could decide, hey, we're going to use Grubhub or Uber Eats or DoorDash or one of the other delivery services. And now instead of Chipotle getting 4 or 5 customers, they may get 1 customer. So all of those things are going to impact Chipotle, looking at how competitive the industry is. We continue to believe that our commitment to higher quality and responsibly sourced ingredients gives us a competitive advantage. However, more competitors have made claims related to the quality of their ingredients, lack of artificial flavors, colors, and preservatives. This is one of those things that I've mentioned to students sometimes when they're doing stock analysis reports. They'll jump on that. Well, Chipotle really cares about their customers because of their food with integrity. And that's probably true to an extent, but a large portion of the food with integrity is that it's a competitive advantage. So one of the things I stress to students is there's a lot of reasons why companies do good things. And having higher quality food is good for consumers. But one of the big reasons Chipotle does that is because it creates a competitive advantage. Now, that competitive advantage works as long as there's not a bunch of other competitors offering the same thing. Once more competitors start offering that, the differentiation becomes less, and it's harder to get additional profits from doing that. If we are not able to hire, train, reward, and retain qualified restaurant crew, and/or if we are not able to appropriately plan our workforce, our growth plan and profitability could be adversely affected. So we've got to be able to hire people. We've got to be able to hire quality people. It's not enough that we have a body there. We have to have somebody that's going to be responsible. They're going to show up for work. They're going to do what they're supposed to without having somebody constantly over their shoulder. As unemployment rates dip, that becomes harder. When this 10K was written, unemployment rates were near record lows in the US, so this was a big issue for a lot of companies, especially companies like Chipotle, which do use quite a bit of labor force. Substantially all of our restaurants operate in leased properties subject to long-term leases. If we're unable to secure new leases on favorable terms, terminate on favorable leases, or renew or extend favorable leases, our profitability may suffer. Locating and securing suitable lease facilities for new restaurants is becoming increasingly challenging as competition for restaurant sites in our target markets is intense. So there's not a lot of great locations where other people are like, oh, we never thought of opening a restaurant there. As you get into competitive industries, and fast food, quick service is definitely a competitive industry, you've got lots of competitors that are trying to get prime locations. Doesn't mean there aren't good locations available, just means the competition for them is going to get a little bit harder. And as there's more competition, there'll be less profitability in that area. Development and leasing costs are increasing, particularly for urban locations. So that's going to raise some of their cost of opening new stores. One of the things here from time to time, we close or relocate a restaurant as a result of adverse economic conditions. One thing that they mention is they may be unable to renew a lease or unable to renew a lease without substantial additional cost at the end. That's going to be an issue. They may have to keep a restaurant open that it's not very profitable, but they're having a hard time getting out of the lease. All these things are challenges. If we're unable to meet our projections for new restaurant openings or efficiently maintain the attractiveness of our existing restaurants, our profitability could suffer. This is one of those things that I think is very hard about running a restaurant. When you open a restaurant, you spend a lot of money making sure it looks nice, but you also have to maintain that restaurant. I don't know how many of you are familiar with the show Restaurant Impossible, but one of the big things that comes up as a constant theme on there is when the guy doing the renovation to the restaurant shows up, a lot of times there's lots of issues with things that haven't been kept up. And so that's a challenge with restaurants. Over time, if you're not keeping the appearance up, you're going to have things like ripped seats, chip paint, things like that, that are going to make customers, maybe this isn't the place I want to eat. Also, opening a new restaurant. Historically, it could take up to 24 months. That's 2 years to ramp up a new restaurant, during which the restaurant generates sales and income below the levels at which they expect them to normalize. In addition, in an effort to increase same restaurant sales and improve our operating performance, we continue to improve our existing restaurants through remodels and upgrades. Some of that may be appearance, some of it may be making them function better. So maybe they're adding a drive-through lane to an existing restaurant, or they're adding a new kitchen prep area to an existing restaurant. All these things cost money. Maybe they're upgrading some of the cooking equipment. All these things are important costs. And if you're Chipotle, remember there are two primary ways you're going to grow. One, increase same-store sales, and two, open new restaurants. So the cost of opening and maintaining restaurants becomes a huge risk factor. Our inability or failure to recognize, respond to, and effectively manage the accelerated impact of social media could have a material adverse impact on our business. Now, I'm not going to talk about this one too much, but just as a point of reference, as you can tell if you look at the video, I'm not exactly a 20-year-old. And when I was in college, the idea of having social media managers was not a list of career opportunities. Nobody even knew what social media was. It didn't exist yet. Now, if you're a restaurant, and you want to have a national presence, you need people managing the social media content. So you need somebody making sure that your social media image is being maintained. And most likely, that's not going to be just one person, it's going to be a group of people that have to do that. The better job they do of managing the marketing through social media, the more effective your restaurant is going to be. Our failure to comply with various applicable federal and state employment and labor laws could have a material adverse impact. This is something that I think a lot of people overlook, and it goes back to the cyber threats issue. It's not just the impact of the laws themselves, it's the compliance cost of laws. These laws and regulations relate to matters such as employment discrimination, wage and hour laws, requirements to provide meal and rest periods or other benefits, family leave mandates, requirements regarding working conditions, all kinds of things here. Now, one thing to keep in mind from Chipotle's perspective is Chipotle has about 2,600 different stores. Well, each store has its own restaurant manager. How does Chipotle as an organization ensure that their individual stores are all staying in compliance? If you have one or two managers that aren't doing what they're supposed to, and that becomes national news, that doesn't hurt just that store. It actually has a carryover to Chipotle. So Chipotle has, and any other chain restaurant, has quite a bit of risk because anything that happens at any one of their stores is going to get connected to the overall corporation. In addition, several jurisdictions, including New York City, have implemented Fair Work Week legislation. Significant number of our restaurant crew are paid at rates related to the applicable minimum wage. Federal, state, and local proposals that increase minimum wage requirements or mandate other employee matters could materially increase our labor and other costs. And that's been a trend that's been going on. So labor costs are going to be going up a little bit. Also, what happens to suppliers of Chipotle as their labor costs go up, input costs go up for those goods. So that's going to be a factor for Chipotle. Now, if you remember when we did the build the model, labor costs as a percentage of sales have been fairly stable. So that's been something that Chipotle has been able to manage. And part of the reason for that is they've been able to pass along those increases in higher food costs to their customers. That works as long as customers are willing to pay those higher costs, but there's always a risk there. We don't know when we're going to hit a breaking point. People are going to say, no, I'm not willing to pay that much more. It's not going to be a case where their sales disappear, but it may affect their sales growth and their ability to keep the company growing. So we're going to go through some more risks in the next video, but this is an idea of some of the things you have to look at through a 10K and think, lots of risks are mentioned. How important are these? How much should I worry about them? And it's a big reason why diversification becomes an important part of portfolio management.